Hi dears, today we are discussing about accounting for leases part 2, problem solving. From the previous video, we can understand that what is leases, then what are the terms used in lease and type of leases. Here we want to discuss about how to calculate or how to prepare leases account, lessees account, lessors account, and how to calculate depreciation, how to calculate yearly payment, how to calculate present value, so also. First of all, we want to understand that the accounting standards for lease accounts. IAS 17 and Indian Accounting Standard 17 describe the accounting policies for lessee and lessor. These accounting standards applies to all leases other than lease agreement for minerals, oil, natural gas, and similar regenerative resources for film, video, plays, manuscripts, patents, copyright, and similar items. So, we should understand that it is only for the items which is not listed here. So, accounting standard 17 describes only those items which is not listed here. Now we are going to start accounting by lessees. Accounting treatment of the books of lessees. Before discussing the account treatments, we should understand two principles of finance lease. First of all, we are discussing finance lease. We know that there are two types of lease. The first one is finance lease and second one operating lease. Here we are discussing first of all finance lease. In finance lease there are two principles. We should understand that before calculating, before entering to the problem part, we should understand the two principles. First one, initial recognition. Initial recognition is a recognition by the lessee in its balance sheet of about the financial lease, which means lessee should record financial lease as asset and liability in its balance sheet. The amount shown in the balance sheet may be fair value or minimum lease payment, whichever is less. Fair value means the market fair value, and minimum lease payment means the amount which is paid to the lessor. So, by comparing these two values, whichever is less is shown in the balance sheet amounts. So, initial recognition is the process of recording the financial lease as asset and liability in the balance sheet. That is initial recognition. Then we want to discuss the second principle, initial direct cost. Initial direct cost is the cost incurred by the lessee on behalf of the purchase or purchase of the machinery on lease. So we should add the amount of such expenses with the asset cost and show on the balance sheet with the asset. But we should exclude some items from initial direct cost, such as commission, legal fee, etc., which are incurred sales and marketing team. Only the amount which is connecting with the purchase of the item, purchase of the leased item, can be added with as initial direct cost. Okay, this is about the accounting treatment of financial lease in the books of lessee. First one, for recording the leased asset. Here the entry is leased asset accounted to lessor's account. We know that while purchasing an asset, the entry was asset accounted to the vendor. Here we are purchasing the asset on lease, so leased asset accounted to lesser account. Lesser means the vendor. Then some points are to be noted. First one, in the case of giving an amount, we should take fair value or present value which is less. Present market value or fair value which is less. If we given two amounts, present value and fair value, we should take the amount whichever is less. The second one, if there is a rental payment, it will comprise of two elements, interest and repayment amount. We should understand that the amount repayment amount is include two items, two elements. First one, interest amount, and second one, repayment amount. While calculating the amount of periodic payment or yearly payment, we should understand that there is two elements. First one, interest, and second, repayment amount. So we should calculate the percentage of interest and the amount of interest and repayment amount separately, and it should be shown separately. The most of the part of amount paid in starting period goes to interest, and after the interest amount will decrease and payment amount is increase. The second one, to record the initial direct cost. We already discussed that what is initial direct cost. It should, if there is initial direct cost, it should be treated as leased asset accounted to bank. It is a payment to the leased asset, so it is treated as the value of asset. It is calculated as the value of asset. It is added to the value of asset. Then third one, for recording the finance charges at the end of the period. The financial charges like interest should be treated as below. Finance charge accounted to lessor's account. Then the fourth one, for period installment payment of lease. We already said that the installment amount will be paid in periodic, and each and every installment paid, we should pass a journal entry, lessor's accounted to bank. And the next, fifth one, for recording depreciation of the leased assets. If depreciation is calculated or depreciation value is given, we should enter a journal entry, depreciation account debtor to leased asset account. Then sixth one, for transferring finance charges and depreciation on leased asset to profit and loss account. Profit and loss account debtor to finance charges to depreciation. Here we calculate two expenses, finance charges and depreciation, and it will affect the profit and loss account or cost. It will affect the profit of the business. So The two amounts should be transferred to profit and loss account. These are the entries used to show the balance sheet of the lessee's account. By using these entries, we can prepare lessee's account, lessor's account, and balance sheet of the lessee. Then we want to discuss about accounting treatment of finance lease in the books of lessor. We know that lessor is the person who was the owner of the asset. So we can discuss about the accounting treatment of lessor. First one, for recording the finance lease asset as receivable from the lessee. Here, lessor is the seller of the product or seller of the machinery. So he should enter the journal entry as a sales entry, a credit sales entry. Here, the lessee is the creditor or and lease sales is the sales account. So he drawn lessee's account debtor to leases account. Leases sales. Okay. The second one, for recording the initial direct cost incurred by the lessor. If there is any initial direct cost incurred by lessor, he should be treated as lease expenses accounted to bank. It's an expense. And the third one, to record finance charges at the end of the period. Lessee's accounted to finance charges. If there is any expenses, financial charges, he should debit to the amount to the lessee's account. If there is any financial charges for lessee, he should treat as the expense of lessee. So he should give the journal entry lessee's account to finance charges. Then the fourth one, for receiving periodic lease payments received from lessee. Bank account to lessee's account. Here we discussed about the topic lessee's account and lessor's account and how to journalize the expenses and incomes on lease sales or lease purchase. Then we want to discuss about depreciation policy. While calculating depreciation, we should clearly understand that how the term or the life of asset will be calculated, or the depreciation term will be calculated. Here we should know that if lessee will obtain ownership after the period of lease or after the lease agreement, then the term is lease term. If there is no ownership transfer, the depreciation is calculated for the term lease term or life of the asset, whichever is less. Then we want to discuss a question here to calculate the periodic payment amount. Here, on 1st January 2015, a company bought a machine under finance lease. The cash price of the machine was 7,71,000, while the amount to be paid was 10 lakh. There's a hike in the price because it includes interest also. The agreement required the immediate payment of rupees 2 lakh. which means an initial amount of 2 lakh will be deposited on the asset, with the balance being settled in 4 equal installments commencing on 31st December 2015. The balance amount, which on 10 lakh, there is 2 lakh paid in advance, and the 16 lakh, sorry, the 88 lakh rupees deposited on 4 equal installments, which commence on December 15. The charges of rupees 2,29,000 represents interest of 15% per annum. Then the effective interest rate. Calculate on the remaining balance of the liability during each accounting period. We want to calculate the remaining balance, how to pay the remaining balance, or which is the amount paid each and every end of the period. Depreciation on the plant is to be provided for at the rate of 20% per annum on a straight line basis. Here the depreciation is 20% per annum on straight line basis, assuming a residual value of nil. There is no residual value, which means at the end of the lease term there is no balance. So there is no amount for the machine. Show the outstanding capital liability for each year. We want to calculate the outstanding capital liability for each year, every year. Now we can how to calculate the amount. First of all, we know that the cash price 7,71,000 and initial deposit 2 lakh. The balance amount is 5,71,000. Then the interest amount for the first year 15% is 85,600. So the amount payable is increased to 57,000, sorry, 5,71,000 plus 85,600. Then the 31st December 2015, the first installment is paid 2 lakh. Balance amount calculated on 31st December 2015, 5,71,000 plus 85,600 minus the paid amount 2 lakh. Then the balance on 31st December 2015 is equal to 4,56,600. Then interest is calculated on that amount, that is 4,56,600 is equal to 50% of 4,56,600 is equal to 68,500. And on 31st December 2016, installment amount paid 2 lakh, balance at 31st December 2016 is equal to 3,25,100. The process is up period on 31st December 2018. The installment amount 2 lakh paid. There is no nil balance for payment. Full amount is paid within 31st December 2018. Okay. The interest amount is taken as multiples of 100. So there is a slight difference between the interest amount calculated and shown here. Here a question relating to leases. X Limited entered into a lease agreement with Y Limited to purchase a machinery for rupees 12 lakh on 1st April 2015. The lease agreement provided the following terms. There are some terms relating to the lease agreement. First one, lease tenure 36 months. The duration of term was still 36 months, that is 3 years. Rate of interest 10%. Annual lease rental 5 lakh, which means X Limited should pay rupees 5 lakh each year, and interest amount is 10%. Then guaranteed residual value 2 lakh. the value of the machinery at the end of the period was should be 2 lakh, treated at 2 lakh. Then calculate the unearned financial income. Also write journal entries in the books of lessor. Okay, then this is the question for calculating unearned financial income, and also write journal entries in the books of lessor. Here we want to calculate the unearned financial income and the amount paid for each year as interest and as rental amount. Then after we want to pass necessary journal entries and calculate the amounts. First of all, we want to calculate the net investment in the lease. For calculating net investment in the lease, we should multiply the amount paid in each year with PV factor. We know we already studied the how to calculate PV factor, and here PV factor is given. Then we want to each value with the PV factor. Then first year particulars lease payment amount is 5 lakh. Then we want to multiply the 5 lakh with 0.909, which is the PV factor. The amount 4 lakh 54,500. And the second and third year the same, repeat the same. Then the residual value, third year residual value calculated. 2 lakh is the residual value. To calculate the residual value, net residual value, you want to multiply residual value with PV factor 0.751. Then the net residual value is 1 lakh 50,200 only. Then there is a difference between the gross investment and net investment. Such a difference is called unearned financial income. So here the amount is 3,06,800 only. That is the amount of unrealized unearned financial income. So the unearned financial income is the difference between gross investment and net investment. After this, we want to calculate outstanding balance and lease rental. Outstanding balance is the amount payable after each year or after the period of each period. Then the lease rental is the amount paid for lease amount without interest. Here first column shows the year number 1 2 3, then opening balance, net investment, then lease payment, lease amount, total paid amount, then interest amount, then payment towards net investment, then balance outstanding. The interest is calculated at 10% on opening balance. Then payment towards net investment is calculated as lease payment minus interest. Then balance outstanding is calculated as lease payment, opening balance minus net payments towards net investment, which means D. A, B, C, D are the four columns, and first column is A, then second column B, third column C is calculated A into 10%, then D is calculated B minus C, then last column is calculated as balance is calculated as A minus D, the total amount opening balance minus paid amount. Okay, here the values are here we can see that the payment towards net investment is increasing year by year, and the percentage of interest is, or the amount of interest is decreasing year by year. That's the difference between payment towards investment and interest. Okay, then we want to discuss about the journal entries in the books of Y Limited. These values are shown in journal entries, and this is the values entered into the books of accounts of Y Limited. Then we want to pass necessary journal entries in the books of Y Limited. The first entry to record the finance lease, X limited account debtor principal amount, then X limited account debtor interest amount, to asset account to unearned financial income. X paid amount of rupees 13,000, 13 lakh 93,200 as principal amount, and 3 lakh 6,800 as interest amount. Then the amount goes to asset 13,000 93,200, and unfinanced income, unearned finance income 3 lakh 6,200. This is the first entry for showing the purchase of the lease asset. Then the second one, bank account debtor to X Limited. Here the X Limited paid the amount to Y Limited, so Y Limited shows us as a received bank account debtor to X Limited, the full amount 5 lakh rupees each. The third entry is shown as the interest received from X Limited, but it is shown as unearned financial income. Here the entry is unearned finance income debtor to finance income. The interest amount 1,39,320. Then the next year the amount of 5 lakh is paid received as lease payment, bank account debtor to X Limited 5 lakh. Then the same entry for interest received, unearned finance income to finance income 1 lakh 3,252. Then the next year bank account received from X Limited, bank account debtor to X Limited 7 lakh rupees, which includes 2 lakh residual value. Then here the entry, bank account debtor 7 lakh to X Limited. Here 5 lakh, given 5 lakh, but it is 7 lakh. It's also 7 lakh. Bank account debtor 7 lakh, and to X Limited also 7 lakh. And finally show the last interest amount, unearned finance income debtor to finance income 64,228 each. Here the amount of these are the journal entries in the books of Y Limited. Okay, thank you.